The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day, so you can be up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and that anything shared in our content should not be construed as financial advice.
5, 4, 3, 2, 1.
Where does the allocation of funds happen right now?
And it'll go exactly where you want it to go. The next bit, after that, you'll enter and then it'll go up.
How would you enter, right? What if you're new to order blocks? What if you're nervous, right? Let's say.
And the correction moves is in the A, B, C move.
Today's stream is made possible by our partners and sponsors. If you're looking for a new broker, trying to get funded, or looking for a trading community to join, consider checking out the links in the description below. By using these links, you'll get access to great products and be supporting the channel. Without further ado, the show is about to begin.
Alrighty, traders. Good afternoon, good morning, good evening, and welcome to the A1 Trading show this morning. Here on a Wednesday, man, that music I just want to jive in that music. Yeah, I got some moves. All right, traders, we're going to go take a look at some trade opportunities this morning as we look at the markets. We just had some news coming out last night. We had the rate decision coming out for the New Zealand dollar. The RBNZ decided to keep the rates not 25 basis point, but actually raise it. I said keep. They didn't want to keep anything. They wanted to raise it 25 basis point, but they ended up raising it 50 basis point. It was a shock to the market, but I posted yesterday on my Telegram link just before the news. I said, listen here, we're probably going to get a whippy-lashy type of move, but we're probably going to see, based on technical setups, we're going to see a bearish New Zealand dollar. And I said, we'll see how it plays out. I said, maybe not in the beginning of the announcement, but eventually when the dust settles, we'll see a bearish move on the New Zealand dollar. Let's take a look and see exactly what happened to the market last night. And let's address the news that just came out this morning as well for the Canadians. So let's go jump into the charts quickly here and take a quick look at, this is the post that I posted last night. You can see right here. And this was just before the news came out. This was at 9:30 or 9:26. The news came out at 10 o'clock last night. And I did say that it might not be at the start of the announcement, but as the dust settles down, we'll see a bearish move on the New Zealand dollar. So we went ahead and took a look over here. Here is the, let's go to the New Zealand JPY right here, because we are looking at JPY crosses. And there you can see right here, we had this big spike here. Let's go to the 1 hour time frame. You can see a lot better. There was a big spike here to the upside based on the fact that they now raised the rates 50 basis point. But the market seems to think that this is maybe just to be this is a panic. Maybe because they didn't start early enough, that they weren't ahead of the game. But this is how the market reacted. Now, normally, just as some of you might not know, normally when they raise the rates if they raise the rates, normally that's a positive move on the currency. Now, we are not seeing that in most cases, especially the US dollar as well, just because I don't believe that the raising of rates is at the right timing. They should have started early and slower instead of this desperate move that they're doing right now by the central banks. Anyways, it is what it is. We're also looking at the JPY crosses. For at least the last month and a half, we've been looking at JPY crosses and looking for the turning point, looking for the tops and bottoms of those pairs. And so as we go ahead and dig into this pair right here, we can see right here, that's that strong rally that we've been looking for, some correction move. And so the market's setting up right here. I'm going to go to the daily. You can see that we have a definite overbought. This is way overbought right now. So correction is due on the New Zealand JPY, and not just the New Zealand JPY, but JPYs across the board. You know, traders, they always say, do not try and pick the tops. I'm telling you right now, I'm looking for the top right here. I do hold a lot of positions in on the New Zealand, well, not New Zealand, but the JPY crosses that I'm selling, that I'm hoping to go ahead and recover on. So I'm big time monitoring the JPY crosses right now. If we take a look and see this one right here, let's get the text out here. you can see we do have some swings. You know, I always pay attention to the swings, and we do have some swings here. And these swings are showing us that price has moved in a 5-wave sequence. And we actually are trading at the 5th wave up here at the top. I'm also seeing some trend line testing right here. Let's go ahead and move this. I'm going to go ahead and pull this right here. There we go. So we can see that there is this wave 1, 2, 3, 4, and 5 up here. There is a sort of well, you can see it's like a broadening formation in a sense, but we do have a higher top here with a flatter bottom. So we're looking at the resistance holding here at the top, also at the 5th wave. And so the expected move on this would be if the market moves inside this. By the way, you also got to look at 5-wave structure in here. If we're looking at a 5-wave structure with inside here, it starts off by 1, 2, 3, 4, and then 5 down here, and then is expected to break back up north. So we're in this 4th wave right here. 4th wave. We're looking at a 5th wave downward test to take out the wave 4, and then at that point, we're probably looking for price to go ahead and rally. So if we have to look at the market from a long-term perspective, and you absolutely have to. You have to know where the turning points are going to be in the market in order to be able to trade that. I would say that the New Zealand JPY is ready to get bearish on us. Now, I know with the Bank of Japan policies that they're doing right now, continue stimulating, continue buying bonds and all that good stuff, it's not really helping. But I believe that all of that stuff is eventually going to go ahead and filter out into the market, and it's going to start wearing out. We're going to start seeing some downside move in the New Zealand crosses, or these JPY crosses, which means that we're going to start seeing some strength out of JPY. They don't want a too weak of a currency pair. They don't want a too strong of a currency pair. So there's that happy medium that they're trying to get to. Right now, they've got a too weak of a currency pair, which of course is an issue. So they would definitely want to go ahead and look to move it. Now, we all know that the Bank of Japan always looks to manipulate their price or their currency. And they're certainly doing that over the last month and a half. But let's go ahead and take a look, because the markets wave and they wave and they wave. Doesn't matter what the central banks do, price will wave. And so there is a downside wave anticipated on the New Zealand JPY. Now, I'm not just going to take the New Zealand JPY into consideration. Let's look at other JPYs to confirm what we're looking at right here. So here is the New Zealand Swiss. That's wrong. I'm looking for JPY. Sorry, my bad. Here's the pound. Pound JPY right here. Same sort of scenario. We have this big, strong rally up here. Correction is due. Overbought condition. We haven't seen negative divergence, but we do see an extremely overbought condition, making sure that we are anticipating some sort of correction. So it's important to keep the focus on these type of things where we're looking at one currency pair, get confirmation on multiple currency pairs, and you sort of like get a story put together. So if we go to, so here we go, pound JPY, also looking for correction, all right? Very overbought, looking for correction. And by the way, traders, sometimes it takes a little bit of what we call divergence, a little bit of price moving a little higher, but then we start seeing the momentum moving in the opposite direction. And when we start seeing price and momentum disagreeing, that sets up either a positive or negative divergence level. And that is good for us when we're looking for tops and bottoms. So we'll be expecting price to continue north a little bit, but obviously eventually following the downside move. So pound JPY looking pretty much looking like a sell-off. And let's go to US dollar JPY right here as well. Same thing, all right? Despite of the fact that the market has continued to rally, look at what the oscillator is. This is a perfect example, all right? If there is anything that is setting up with a beautiful divergence set up right here, it is the US dollar JPY. Take a look over here. Here we have price moving higher, and we have the oscillator moving lower. This is a awesome setup for traders that are looking for opportunity to pick tops and bottoms here on the US dollar JPY, okay? So you might say, Big Dog, I'm looking for a larger time frame to confirm the direction. This is what's helping to confirm the direction. Now what you need to do is you need to go down to a lower time frame and look for opportunities on the lower time frame. So the question here is, how do you do that? What do you look for? How do we know that the trend is changing? How do we protect ourselves in our trade so that if the market isn't finding the top and it goes higher, how do we get out of the trade and cut our losses and then wait for the next opportunity? Well, this is the deal. And by the way, if you're thinking, well, Big Dog, why don't you just keep buying US dollar JPY? That's because we believe that the JPY crosses is due for a big pullback. And I don't want to be caught up in any buys on JPYs, all right, or JPY crosses. I want to be selling those JPY crosses. So this is what I'm going to do right here. I'm going to go into the 1 hour time frame right here. So on the 1 hour, you can see that we have trends. And these trends within trends within trends. So you can go ahead. Now, this, of course, depends on what type of trader you are. You're short term, medium term, long term, whatever trader, scalper. You've got to go to the time frame that is suited for your own trading. And so if I look at the 1 hour right here, I notice that we have this trend line going up. So what am I going to look for? I'm going to wait for the market to confirm trend direction, all right, or these change of direction. And so this is a trend on the 1 hour. And so if the market breaks through right here, takes out a low, then comes back up to retest, then we're setting up with a beautiful crown pattern. This is a bearish crown, which is great for picking tops and bottoms. Now we found this on the 1 hour time frame. We can go ahead and trade this. This is how we trade it. We'll trade the correction move. Always trade the correction move. Stop losses above the crown high, and then go ahead and look to trade the downward move. That's how you go ahead and confirm that the tops and bottoms have been met. If you put up a trend line right here and the market has not broken that trend line on a 1 hour time frame, but you've seen indication on the larger time frames, then just know this, that it's not been confirmed yet. Those tops and bottoms have not been confirmed. So this is a great way to go ahead and do that. All right. Now, let's go take a look at US dollar CAD. I want to look at two pairs today, US dollar CAD and Euro US dollar. I'm holding positions on both of them. Now, US dollar CAD, we're expecting some weakness out of US dollar CAD. And we're currently getting that now off the news. Let's take a look at the news that was reported right now. So here we go. So the news out this morning, there it is. We had, oh, look at that. Look at that. So the Canadians definitely kept a very steady rate hike. They did not do what the Kiwis did by raising the rates 50 basis point last night. They decided this morning to go ahead and raise it according to what they said they were going to do, 25 basis point. So they are now at, oh my goodness, sorry. Let me go ahead and retract that statement. Yesterday, actually, in fact, they were stated they were going to raise it 50 basis point. I just remembered now. The New Zealand, the Kiwis decided to raise it 25 point, or at least wanted to speculate 25 point raise, but they went and raised it 50 basis point. They shocked the market. Today, we got the Canadians. They stated that they will raise it 50 basis points, and they actually did exactly that. They raised it 50 basis point, not 25, so they stuck to their game plan. So they got aggressive, just like the New Zealand dollar. Now, if they get aggressive, how come we're not seeing the same sort of result, the same sort of move as we saw with the New Zealand dollar? The Kiwis raised it 50 basis point yesterday. We saw this initial spike. Then the market just dropped. We saw the New Zealand losing value. But today, we just got the rate decision on for the Canadians. Also, excuse me, also raising, it's taking my voice away, also taking a 50 basis point stand, but yet we're seeing a different move. Let's go to the chart. Let's take a look at the chart right here. So here we go. So initially we saw this little rally. Let's go to 15-minute time frame. It's easier to see that. We saw a big spike up to the upside right here. And with the spike going up, that's showing that we're actually having a weak currency. So I'm talking about for the Canadians. So with a spike here, that's Canadians weakening. But then it dropped back down south. So it's dropping right here. That's showing stronger Canadian. That's why we're seeing a bearish move against the dollar. All right. So dollar CAD, bearish move if the Canadian is stronger. And so it's a little different setup that we saw last night, right? We're actually seeing the Canadian getting stronger. Weird. let's go ahead and do some homework here. And so what we're going to do is let's take a look across the board. Maybe this is a dollar move. Maybe this is a dollar influence right here. Let's go back to the fundamentals right here. So the fundamentals right here, if I look here, it looks like we did have some PPI number coming up for the US. PPI numbers, it's monthly data. I don't think too much of that, but it came up a little higher at 1.4%. So there's nothing else here that could have pushed it up. This must be dollar. This must be a Canadian dollar move. Let's go to, let's see here. Let's go to New Zealand CAD. This is the 15-minute time frame. Same thing. Strong. All right, look at that. Strong move in the New Zealand CAD right here. All right, strong move. And then we had now it coming back up to the original price. So we did initially get a strong Canadian move, and now it's come back up here. So pretty whippy-lashy. And so I'm thinking that maybe a lot of the news that they reported out today has already been discounted because they never surprised the market. They said it's going to be a 50 basis point. They came out with 50 basis point. We all know that the central bank's going to raise rates, right? It's just a matter of what they say and what they do. Is it the same? And so it looks like the markets are really sort of like discounted that raise and not too surprised as to what's going on. So you'll have whippy-lashy movement, but we're not going to get any action out of the market. New Zealand CAD, no action. Let's take a look at Aussie CAD. Aussie CAD, we had a strong move on the Canadian, but then pull back up here. So again, maybe we're going to see the market just do what it does, right? Follow wave structure. So let's take a look right here. What is a wave structure? Well, here we go. Wave 1, 2, 3. So we're probably going to see the market rally and then turn around and head back down south. So it's sticking to its normal day-to-day routine. The news out this morning is not really affecting the way the markets are technically set up. Just a bit of whippy-lashy movement, but that's about it. Okay, let's go ahead and double check on other charts. Let's go to Euro CAD right here. All right, so here we go, the Euro CAD. Now, this is interesting. This is really interesting. Take a look at Euro CAD right here. If I go ahead and put in some tops and bottoms right here, look how the Euro CAD is sideways at the moment right now. Okay, so it's come down all the way. Look at that spike. The spike managed to get down to this low right here, but it's bounced back up again. So again, we had some strong Canadian move pushing Euro CAD bearish towards that support, and then bounced back up and is back to where it was when at the start of the news. No big deal, right? Nothing at all. Didn't really affect the markets at all. All it did is just a whippy-lashy move, and that was it. How much movement did we have? About 30 pip move. So it was a 30 pip move, and that could also be part of spread. The spread could have widened about 15 to 20 pips. So this may not even be a dealable rate. This is actually just spread. Brokers widen their spread just to make sure that they don't get caught on a bad trade. So they go ahead and widen the spread, and now they tighten back up again. They're back where the market's at. So no big deal. Let's take a look at one last one, and then we're going to take a look at some setups. CAD, look at that. CAD Swiss right here. Nice little rally, and pretty much nothing after that. Okay, nothing after that. Now, I do have some trades that I placed this morning in my Pip Hunter show, and you can see right here, I actually I was buying CAD Swiss, and the market rallied up just about short of my target, and then went ahead and pulled back again. So I didn't profit on that. And then the same thing happened right here on the US dollar CAD. Price also moved all the way down here, didn't get me out. And by the way, the reason why it didn't get me out is because of spread. You see, sometimes when the bid price, when you sell in the market and the bid price gets to your target, it doesn't necessarily close you out because it depends on the ask price. And if the ask price is wider because of spread, the market can go through the bid price can go through your target, 10 pips. But if the spread is 15 or 20 pips wide, you're just not going to be taken out. So there's a lot of traders that go, man, the market got past my target or past my limit. Why wasn't I taken out of the market? Well, that's because of that reason, because of the spread, especially when it comes to news. You have to understand that. Okay. Now, oh, you're welcome, Antonio. You're welcome. Now, let's take a look at a couple of setups right here. Let's talk about long-term moves that we should be looking out for. And I'm going to go back to the Euro US dollar. All right, let's go to Euro US dollar right here. And I'm going to go back to the US dollar CAD in a moment right now. But let's go to Euro US dollar right here. All right. Now, I'm going to go to the actually, no, let me pop open the daily right here. All right, trader, I know I've got a lot of stuff down here because I'm busy checking out a few things. So let me go ahead and clean that up. So this is the deal. The US dollar, Euro US dollar, if you're looking for the turning points, let's talk about turning points, right? The market's always going to have turning points, and the best place to look for turning points is, of course, the larger time frames. Daily time frame is really good to go ahead and look for those levels. So what we're doing here is we're looking for turning points in the market so that we can start establishing trend on the lower time frame. Remember, traders, when the larger time frame shows you a turning point, just like I showed you on the New Zealand CAD or New Zealand JPY, what you do is when you're looking for a turning point in the market based on a larger time frame, then what you need to do is go down to a smaller time frame and establish trend on the smaller time frame. So the first thing is, if I'm looking at a Euro US dollar chart and the market is showing that we're in 5-wave sequence, we've seen a 5-wave structure right here, I'm going to expect price to go bullish. So my turning point would be down here, expecting the market to rally towards my 4th wave right here. Because if I go ahead and count the waves, we've got 1, 2, 3, 4, and 5 right here. Now I'm looking for price to go to my 4th wave and take my 4th wave out. So on Euro US dollar, I'm bullish at Euro US dollar. We haven't seen it started to break up north yet, but this is where traders need to go down to the lower time frame and start establishing trend. So let's go ahead and do that. All right. So if we go to the 1 hour time frame right here, and we take a look at the 1 hour, what you've got to do is draw in that trend line. Let me see if I've got my trend lines already in here. I got a lot of trend lines in here. All right, let's do this. There we go. All right, so that would be the trend line right here. Now, with the trend line, what I've done is actually, in fact, the last dip that we had, I actually placed in my wave structure right here as well. Wave 1, 2, 3, 4, and now the market's gone down to the 5th wave right here. So again, looking for the market to rally. Now, here's my downward trend line right here. All right. So what I'm looking for is I'm looking for price to break through the trend line, come back to retest, and then buy on the retest as we start trading north. So I'm looking for wave structure at the bottom of the market, at the bottom, and work my way up. And I'm looking for this wave structure because remember, traders, the market moves in waves. And so what we'll be looking for is this type of wave structure right here as price starts working towards that 4th wave high on the daily time frame. So let's get some numbers for you. What is our target that we're looking for? So let's go back to the daily. This is the high right here. This is the 4th wave high right here. So I'm looking for this price at around about 14, it looks like 81. So 1.1481 is the upside target. So price is trading at the moment right now 1.0830. So we're looking for price to move all the way up to 14. Man, that's a long way up. 1481, which gives us an opportunity of approximately 655 pips. Now, it may go even higher than that, but we're looking for a minimum rally, and it's not going to be in one straight line. It's going to be in wave structure, right? So we're looking for a rally in the Euro US dollar to around about 650 pips to 1481. Now, I'm not going to take this as a consideration only. I'm going to look at other things like US dollar CAD because I want to look and see if this is if it's the US dollar that's moving or is it the other currency that is traded. So let's take a look at US dollar CAD right here. And let's get a feel of what this is telling us right here. All right, so here we go. So here we have US dollar CAD. Now, US dollar CAD is actually range bound. You see tops right here. You see bottoms down here. And then we've got a lot of movement in between. Let me go ahead and clean up house here. There you go. All right, a lot of stuff I'm putting in here. There you go, cleaned it. All right. So here we have US dollar CAD right here. Now, US dollar CAD is range bound. There was a trend line. I mean, when you're in the range, putting trend lines up like this doesn't really help, because what you're really looking for is the market go back down to the bottom right here. So, but once we're at the bottom right here, we're going to look at this and go, okay, there's a couple of things that we have to take into consideration here. Firstly, number one, do we see a trend line break and retest? There it is there. All right. So we've got a break of a trend line right here. We've seen a lot of indecision right there. And so there's a good chance that price is testing this resistance right here and going to push lower. So we may end up seeing price dropping further down south down here. Now, if the US dollar CAD is bearish, then that would mean that the US dollar, the euro US dollar would be bullish. That makes sense, right? Let's take a look at the dollar index and let's see if we are expecting a weaker dollar. I'm going to go to the dollar index right here. Take a look here. Okay. So if you look at the, and this is the daily time frame. If you look at the daily time frame right here, this we had on this chart, we had wave 1, 2, 3, 4 down here, right here. That's 4. I'm going to move that right to the low, 4 right there. And then we had 5 up here. I'm going to move that all the way to the top here, 5, right? And since the market had completed 5th, we knew that price is going to move down to wave 4, which is down here. But you notice that the market did not reach there. So, which means that this that we're seeing right now is a bearish flag. Go ahead and say it, a bearish flag, right? It's a bearish flag, which means this is the flagpole right here, and this is the flag right here. And so this is the move that we should be expecting on the US dollar, on US dollar. So the dollar index is telling us right now, based on how it's set up right here, that we should be looking for a bearish move, right? Looking for a bearish move. So if I go into the chart right here, I'm looking at this and I'm seeing, okay, we had a nice little structure right here. There we go. But now the market's at resistance. Do I see negative divergence here? That's another thing we need to look for. Look for the signs. Do we see negative divergence here? The answer to that is yes, we do. Here is new highs. Oscillators moving lower. We never got into an oversold condition yet. So there is definitely selling pressure right here. So dollar is showing signs of a turning point. All right. So that means dollar is going to weaken. Euro, US dollar is going to rally. US dollar CAD is going to sell off. And so we're going to get what we saw on the charts. We're going to get that play out. That's what we're looking at right here. So I think that both US dollar CAD as well as, of course, the dollar index, sorry, not dollar index, euro dollar is good setups, great setups for traders to go ahead and take a look at. Now, let's talk about what's going on with the yen pairs. All right, let's talk about what's going on with the Swiss pairs. Let's talk about what's going on. In fact, let's just talk about JPY, Swiss, and of course the US dollar. If we pay attention to what's happened over the last couple of months, we'll notice that we've had a very strong Swiss, all right, very strong Swiss, and we'll go to the Euro Swiss, and I'll go ahead and show you. We had a strong Swiss, and we had a weak JPY, and then we also had a stronger, let's go to it, there's a stronger dollar. Let's go back here to the euro. Okay, so, and again, I'm talking about over the last few months. So let's pull up this chart right here. This is the 4-hour. So you can see it right here from about March, okay, around about March, what is that, the 30th of March, is that 30th of March? Yep. So actually, no, this is actually not a couple of months. This is actually just the last couple of weeks, all right? So we've seen the dollar strengthening that's pushed the euro down south right here. Now let's go to the Euro Swiss right here. Take a look at the Euro Swiss, okay? Here's the Euro Swiss right here. The Euro Swiss, currently right now, if we take a look over here, the Euro Swiss over the last few weeks, again, around about March, all right, there it is there, 30th of March, we've seen the Swiss actually strengthen, and that's what's pushed the Euro Swiss down. So we've had stronger dollar, stronger Swiss, and now we're looking at the JPYs, and I mean, we all know, I don't even have to go to a chart on any JPY cross. We know the JPY has weakened across the board. That's caused these big rallies on the JPY crosses. So like New Zealand JPY, Pound JPY, Euro JPY, Aussie JPY, all of them rallying. There's a turning point, a change in momentum coming at the moment right now. And we're gonna start seeing this play out. In fact, if we actually go ahead and take a look at the dollar index chart, and because we're expecting the dollar index to sell off after the rally that it's been seen, that means we're going to start seeing dollar dipping, Swiss dipping, JPY rallying. We're going to see a change in safe haven, in safe movement. We're definitely going to start seeing this. There's going to be a shift in safe haven. This is what this means for us. For those that have been trading Euro Swiss, and I'm one of them, I'm buying on Euro Swiss. Take a look at what we're seeing right here. I'm going to go to the daily time frame. All right. I'm pulling up a lot of data right here, but this is what we're going to look at. Take a look at the wave structure. Here we go. Wave 1, 2, 3, 4. A beautiful retest of wave 1 right here. Beautiful right here as we got to wave 4. And now, right here at the 127 right here, where we always anticipate price to change, we started to see change in momentum, right? We've seen positive divergence. We've seen a swing up. So our focus right now would be going to the 4-hour time frame and looking for anything that's showing upward swings. So let's do this. And also, by the way, if you like to write down numbers of a target that the price is looking for, it's chasing after this level right here, which is going to be, let's see if I can actually get that number. That is 1149. So 1.1149. Okay. So that would be, according to what we have right here, that would be around about 1,000 pip rally. All right. At least 1,000 pip rally. Now, let's go to the 4-hour and take a look at the 4-hour right here. This is what the 4-hour looks like right here. So the 4-hour, we've had already a wave 1. Now, there could be a couple of traders say, well, big dog, this is the 5th wave, not that. That's the 3rd wave. And so if I had to go ahead and say, all right, let's use that, okay, then I look at this and say, A, B, C. So we had an impulsive move. This is an impulsive move, giving us a wave 1. And then we had an A, B, C correction right here. And now we're looking for price to rally. So look at the perfect lining up there. We've got the oscillator down below. We actually, we've seen price showing a little bit of a bullish candle formation right here in the form of a morning star. So this is where we're looking for price to bounce and head north. This could be the tipping point. This could be the pinnacle point of turnaround for JPY crosses, Swiss crosses, and US crosses right here. let's go back to look. It's exciting times to be involved in the market right now. Really exciting times. Let me go ahead and pull this out. Check this out. If the market rallies, we're looking at a fourth wave. This is on the 4-hour right here. We've got a fourth wave high right here. We're looking at the market creating this wave. 1, 2, 3, all the way up here to the top, taking out that fourth wave. So in the short term, or let's say midterm, in the midterm, we're looking for a high here. We're looking for price to go to all the way to 1.0611. So 1.0611 is going to be the midterm target, all the way up here to the top. And so I'm excited about the Euro Swiss. I'm excited about the rally. It's time to start building up your positions and start looking for that upside rally. I think we're going to see a turn in the Swissies. Swissies are going to start losing ground. We're going to see weakness out of Swissy, weakness out of US dollar, and of course some strength out of JPY, which means that a lot of traders that have invested money in Swiss and US dollar is going to start moving their money into JPY. Okay, they maybe got a better belief that things are going to change around, but they're going to move money into JPY. So that's going to be the safe haven right there. Now, like I like to do with everything I do, is just go ahead and reconfirm this again. All right, so let's take a look at the reconfirm. This is the Euro Swiss. All right, I think we've spoken enough on the Euro US dollar, but let's just take a quick look. All right, yep, we have. So we know Euro US dollar is heading for 1481. That's the midterm target. All right, or even long-term target. Let's go to US dollar J. This is we spoke about the US dollar CAD. We already spoke about how the US dollar CAD is possibly going to sell off right here based on the news. But I think the one thing that we need to address right here is what is the oil doing? I mean, what can we expect from oil? We know what's going on with the Biden administration and how they not supporting U.S. oil here and how they looking outside the country to go ahead and get oil back into this country because of what's happening in Russia and Ukraine. But the thing here is, what is the charts telling us, right? Let's go to the charts, because that's the only thing we can believe right here. No one can believe politicians. So let's go here and take a look at the daily chart. Okay. So if I look at the daily chart right here, in fact, I'm actually going to flip this over to a weekly. You can see a lot more data needed here. All right, check this out. So if you looked at the weekly chart right here, it's no surprise to us that we've seen this big rally. Oh, in fact, we've been talking about this for years inside all my trading rooms. We've been talking about, guys, it's great that we've got low oil prices, but you know what? Charts don't lie, and it's telling us, well, they do sometimes, but it's telling us a little story right here, and it's telling us that we could anticipate a nice, well, I won't say nice, but we can anticipate a big rally in oil. And so the thing here is, what's going to make it move? I mean, you never know. You can never really tell what the news is going to do in 5 years from now or 3 years from now. But you can definitely look at the charts, and the charts are telling us when we had these dips right here. It was like, guys, get ready. This thing's going to blow north, because when the market creates these pennants or these patterns, it's always in structure, right? And here we have a 1, 2, 3, 4, and 5. Once we complete that fifth wave, we knew we were going to get a breakout of this pennant. All right, let's just say it's a 90% guarantee we can get a breakout in the direction of that fifth wave move. And so the fifth wave move is bullish year. And so there's that breakout that took place. We moved from all the way down from $10 a barrel. I mean, we had that big spike down to all the way up to 100 and we're at 140, I believe. What is the price that we got to? Let's take a look here. Looks like 129. Yeah, 129. So we're at 129. Now, the question here is, what's oil going to do now? If we could have predicted oil prices rallying, I mean, sky's the limit, right? When it starts breaking out of that pennant. But if we predicted that rally, what can we anticipate now in the short term, midterm, so we can go ahead and use this information to be able to trade other pairs? So let's go take a look right here. Firstly, number one, we've got a lot of resistance over here. A lot of resistance here coming off over here. And so we did mention that if we can stay below this, we're going to go into a retracement move. So this is a lot of resistance right here. I'm going to keep those levels in there, but I wanted to show you where those levels came from. It came from these highs right here. Obviously, the next resistance is going to come all the way up here at the top, right? But let's just take a look as we zoom in a little bit, get closer up to where the market's at. Notice these levels right here. This is why I wanted to show you those levels. Notice how the market did hold off, all right? Resistance held up at multiple levels, but it held up and it's now pushing price down lower. Now, let's take a look right here. I'm going to kill this. I'm going to kill some lines here so we can see what's happening here in the zone. So I'm looking at the chart right here. And so here we have wave one. I managed to get the first structure. Then we had a wave two pullback. We had a wave three rally right here. Then we had a wave four and then a wave five. Now, hold on. I noticed right here that I drew in these swings, but yet I may have picked up the wrong swing. So let's go ahead and do a correction move right here. I used this high right here, but I also noticed that there was this wave going to this point right here. And price traded above that level, which means that my next swing low would be there, and the next high would be here, which means that we have an internal structure. And I'm going to mark that off. This is right here. Wave 1, 2, 3, 4, and then we're looking for 5 going up higher, right? So it looks like that high, and this is why I marked off this high, the all-time high in US oil all the way up here at around about 147, eyes on that level, 147. We're not done with the oil rally. Now, again, that could be a long-term move, but let's take a look at the short term. In the short term, we have enough space or area for oil prices to drop back down to around about $69. Now, we're probably going to work its way in maybe a wave structure like this, but there's room. I'm not saying that we could get down to 69. I'm saying that there's room for price to move down to 69. And so we're in, and I'm going to say it, we're in the most complicated wave, which is wave 4. And wave 4 could be either range bound or it could be in a zigzag, which is a trendy pattern. And let me explain what it is. In a wave 4, you can have the 3 waves, or these 3 ways that the market can actually structure. It can go into like this, which is called a zigzag, or it can go into something like this, where it becomes an irregular flat and then rallies, all right? Or it could be simply something like this, where the market does this, takes out the high, does not take out the low, and then rallies off, which is called a running flat. So this is something we need to pay attention to, right? We've got to take a look at the internal structure. So we'll keep an eye on those to see what structure we're going to be holding. But the one thing I'm going to do right now is I'm going to go down to the 1 hour time frame right here. And the reason why I'm going down to the 1 hour time frame is because I want to establish what the market's doing in the short term. So I see that we have a big swing right here. We have support coming off this low right here. All right, there's a bounce. All right, see here. So there's the bounce right here. Let's take a look at this wave structure. And let's look here and pop this open right here. And we got a wave 1, 2, 3. So there's the first wave structure right here, wave 1. Then we've got another one going down all the way down here, wave 3. And then this is the wave 5. Look at this. Beautiful structure right here. Look at this. Wave 1, 2, 3, and then we had a fifth wave down here, and then the market took out the fourth wave right here. Traders, you got to look at these things. These are great setups right here. So which means that I can go ahead and adjust the swing all the way down here. Okay? All the way down here. And so why is this important? Well, this is important because the market has not reached this 1.618 down here. All right? The market has not reached this level here, which means that there's a good chance that we could still see some downside move. Now, what is also important right here is that we pay attention to this. This is a wave 2 right here. Okay? So we've got wave 1 down here, wave 2. And so if price stays above that level, which it is now, then that means that we're probably going to see price on oil push up a little higher to around about this level, which is about 108. And then at 108, then we'll see a downside move to come back down here. Remember, anytime the market comes back inside the AB boundary, let's call this an AB boundary right here, which is wave 1. Anytime the market comes back inside here, it's looking for a deeper correction move. And so why do we need to know that? Because this is telling us what oil price is going to do and how the Canadian dollar is going to fare against the other major counterparts, right? And so what we could be expecting right here is that there could be some short-term rally in the Canadian dollar, some strength out of the Canadian dollar, all right, just in the short term, as it gets to this level, and then we might see some sell-off on the Canadian dollar, okay? And so if we take this information and we go back to US dollar CAD, because everything comes back down to the same story, right? Go back to the US dollar CAD. What did we say that the US dollar CAD is going to do? We said US dollar CAD is going to sell off. Now we've just reconfirmed, because we've looked at the dollar index. We said we're expecting weakness out of the dollar, all right, based on dollar index. So that makes sense why US dollar CAD will be selling off. But now we've gone ahead and looked at US oil, and we can see that US oil is expected to rally to about 108, which means that we're going to get some strength out of the Canadian dollar that's also going to help push US dollar CAD bearish. So let's go back to the US dollar CAD trade. So right here, we've already started seeing a move right here. We can start anticipating further downside move, just like we spoke about, further downside move in the US dollar CAD. Look at the 4-hour right here. We're looking for price to drop back down to here. We can go ahead and actually mark off this swing here, and you can see that price is anticipated to drop back down to this level right here. That's your target. So again, we'll be bearish on US dollar CAD. Look at the US dollar CAD to move because of two reasons. Dollar CAD is selling off, US oil is going to rally up back up to 108. Okay, and because of those reasons, now we can make decisions on this chart. Traders, you know, sometimes when you look at the markets and you address the technicals, you can bounce around between different type of different charts, and by doing that, you're actually building up your trading plan. You're giving yourself enough evidence, enough confirmation to get confident in the decisions that you make on a currency pair. Because the one thing, if I can leave something with you today, is this: the one thing that every trader needs to know is, what is my directional bias? What is my and how do I find it? Using larger time frames can help you define where the turning points is. Using wave structure, using divergence to look for turning points in the market as well, or to confirm the turning points. Taking trend line or trends on lower time frames and looking for trend line breaks will confirm the directional bias as well, at least in the short term. So you could use all of that information, build up your plan, and then when you start trading a certain currency pair, you can feel confident and sleep at night that you know that you're in the right direction, and that you know that if you commit yourself to that position, that you are going to still profit on that trade because you're in the right direction. And that is number one right there, being in the right direction. All right, let's take a quick look at gold. I know there's a lot of gold traders out there let's take a quick look at gold. And we've been talking about gold right here, coming back down to support here. We actually are bouncing off that support. The last time we spoke about gold in the session, we said that gold's going to bounce off this level right here. We said this is going to be our buy range. And we're actually looking for gold to rally all the way up. We've got a target for gold to go to 2161. So gold's bouncing. We're looking for that rally. Now, I want you to look inside here, okay, at the internal structure. This is a 4-hour time frame. Here's the internal structure right here. If you look over here, we did have a lot of support right here. We had a lot of resistance right here. The market tried to break out there, failed to do so, but we stayed inside here, and now we're breaking out. So could we get a dip and then a rally? Absolutely. And that would be a good place. If you did not get in down here, this would be a good place to want to go ahead and either reinvest into gold or go ahead and actually start playing that trade, getting in on a buy on the trade. That would be a good spot right here to start getting in. So again, gold is on the rally. Buying on the dips is the way to go on gold. Let's go to Bitcoin. Take a look at Bitcoin. All right, so Bitcoin, and let's go to the daily on this. Bitcoin is, in fact, in a little range as well. No, a larger range as well. So Bitcoin's in a larger range, but we still got a long-term target set up on the upside. On the upside, we're looking at least price to come to 80,000. So 80,000 on Bitcoin. If we blow through 80,000, we're still chasing after this target right here at 98,000. So have we, and that's the long-term target. Now, with that being the long-term target, how do we define when it's time to go ahead and trade? Well, already traders, for those that don't know, we've already got the Bitcoin starting its first wave, bullish wave right here. And so we are in this range at the moment right now. And if we break out of the range, when do we know we've broken out of the range? We know we've broken out of the range when this price right here is hit. When we hit 54,000 on Bitcoin, then know this, that we're in a bullish market right now. All right. So when 54,000 is hit, bullish market. Now, up until that point, anytime Bitcoin drops back down to support over there, if you're looking to invest into Bitcoin, best time to go ahead and start off slow, right? Do cost averaging. Buy in on all the support levels that the Bitcoin is at. Because ultimately, traders, and again, this is another situation. If you don't have a belief in Bitcoin and you don't think Bitcoin is going to be the future and things that things that materialize in Bitcoin or any crypto market, then certainly don't invest in it, right? But if you have a belief that yes, this is going to be the future, there is going to be this this market that we're going to be able to trade in the crypto market, and of course everything around it, all the stuff that's happening around crypto, we believe that crypto is going to move. It's going to be bullish over the next few years, and it's going to be strong bullish once we start getting more adoption in. If we look at Bitcoin and we look at the price at 54,000, that's going to signify. I had to say that signify that we're actually going to be bullish again, like we were back in 2017, 2019. 54,000 is going to signify that we're back in that bull market. So watch out for 54,000. That's the level I'm going to be paying attention to. I've invested quite a bit into Bitcoin, Ethereum, all the other altcoins as well. I have invested, and now I'm on the hold. I've put in enough money now to be able to wait. I bought in at good pricing. I'm not reinvesting until I see 54,000 come to play. Once we hit 54,000, I will be looking at altcoins that are cheap and getting in on altcoins, because altcoins will start following suit. We'll talk about that more when we get to that level. But right now, it's time to go ahead and pay attention to what's happening in Bitcoin. All right, traders, well, that's pretty much it, what I have right here for today. A lot of conversation about a lot of stuff, but it's important that we address these type of things, because there's a lot of things happening in the market, specifically on Swiss, JPY, and US dollar, that we need to be aware of, because the turning point is coming. Mark my words today, the turning point is coming on these currencies, on Swiss, US dollar, and JPY. And if we're not preparing and getting ready for it, we're going to miss this ride, and we're going to try and catch up, and that's going to be the worst thing that you could ever do. Traders, this year, I want to appreciate everyone being here. If you could do me a favor, go ahead and smash the like button on this trading the YouTube channel. Also, Nick is going to be in a trading battle tomorrow. In fact, I'm going to be hosting that trading battle. Make sure you go ahead and check out Nick on the trading battle. He's going to be talking about the markets, and we're going to be digging into some details on the trade battle, and that's going to be tomorrow. If you want to get the details, go ahead and reach out to A1 Trading to get the details on Nick's battle tomorrow, and I'll be hosting that. It's going to be quite exciting, fun, and it's going to be a good time. So with that being said, traders, have a fantastic week of trading. We'll see everyone back again, same time, same place, again next week, Wednesday at 10 o'clock. This is FX Big Dog signing off.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker, trying to get funded, or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.